And now, streaming live from the sunny Southern California coast, this is Options Uncensored.
Hey everybody, I'm Steve. Welcome to Options Uncensored. We're making real option trades in real time together. Let's get right into it. First things first, make sure you have your brokerage account open so you can follow along. Have your YouTube video quality set as high as possible. That way you can read the numbers a whole lot easier. Have a calculator on hand so we can do some easy math. If you have a question or a stock you want to go over live together, we can do that. Leave it in the comments below. And finally, remember, this is not financial advice. This is all for entertainment purposes only. All right. Happy Friday, everybody. It's expiration day, triple witching. In fact, it's December 15th. So a lot to go over today. We'll go over our open positions. We'll talk about Boeing in a second since it's expiration. Dow Jones, DIA, we opened yesterday up $5. Roku, we rolled this one to January. Actually, I think Roku's down a bit today. Hold on one second. Cool, yeah, down 4%. So really quick on the Roku one. We sold the 95 and bought the 100. It was expiring today, but we rolled it to January to give us more time. Same strikes for no extra money, no extra credit either way. There is a very small chance that this could expire completely out of the money if it continues its move down past 95 by end of day. It could happen. I don't want to take that risk though. So we got free time for no extra money. So the roll worked. Smart. Next, AMD. AMD is down $28. No worries on that one. SPY position green today. We rolled this one to January as well. We got plenty of time. IWM, where we at? Down 105, 103. Not bad. We got plenty of time for all these. And XBI up today as well. All right. What should we do first? Why don't we go over the Boeing trade first, and then we'll go find some new opportunities. So let's look at the chart of Boeing. We opened the Boeing trade somewhere back in November. I can't remember the exact day, maybe around November 15th or a little after. But since then, we've had this crazy move up. Green day after green day after green day. And our strikes were, we sold the 220 and bought the 225. So our strikes are way underwater. We're trying to roll this for no debit, no credit, just straight across, just getting more time for free. It's possible this could get filled today, but not very likely. So odds are the entire spread will expire in the money. So that means the short spread 220 will get assigned, and the 225 that we bought will get assigned. So they'll just cancel each other out. The negative 100 and the plus 100 will equal 0 shares Monday morning. And we received a credit, I believe, of $86. We talked about this yesterday. $84. So the spread width was $500. But we received a credit of $84. So we get to keep that no matter what. So the max loss come Monday morning will be $416. Like I said, this is the first loss we've had all year. I don't know how long you've been watching the videos, but I think we got a new batch that launched back in August or September, but never had a loss until now. So it statistically does happen. Based on the long strike that I buy to cover the spread, there's about a 6.7% chance of having the max loss. So 6.7, it's not going to happen very often, but 6.7% can happen. So this is one of the rare instances where you just have this crazy move in one direction with no relief. And that's your 6.7% chance. It does happen. So these are all live trades in real time. So there will be losses. It's just part of the game. You have to handle losses. It's not a big deal. Honestly, it happens a couple times a year, but we move on and we have many other trades that are all winners, and they more than make up for the losses. Okay? So if you're ever watching a YouTube channel that never shows losses, they're obviously fake. All right? Next, let's see what new opportunities we have, okay? I mean, if you want to open a short call spread on Boeing, why don't we start with Boeing? I mean, there's got to be some kind of pullback at some point here. This is unsustainable, this rally up. So January expiration, 35 days out. If you want to sell the call side today, Sell the 280, buy the 285. 213 minus 143 divided by 2 divided by 500, 7% there. So I know it's crazy, but I would probably get back in on this on Monday morning. If Boeing's up again on Monday, I for sure am going to get back in on this trade. The fact that it's expired in the money just means you couldn't roll it in time and became too illiquid. As these numbers get higher, right here, the spread is too illiquid, hardly any volume. So that's why it gets harder to roll. Okay? But we'll revisit, and I'll write it down for Monday. Boeing. Just because in the short term it's incredibly overbought. So I'll reopen this one on Monday morning. Okay? Moving on, Costco, C-O-S-T. Post-earnings move today. Here's our chart. Not much of a move. Up almost 4%. Most likely all that's priced into the contract, so there's not going to be any edge here. Not a lot of volume, not a lot of liquidity, so the put side is a little better. If you sold the 6, never mind. Too illiquid. Let's move on. Next, Lennar. This is also post-earnings. Lennar is a home builder. Home builders have had a great run recently. Yes, yesterday after the close. Here's our chart. Same thing like many other stocks. Big move up since October. It just continued. Looks like it opened down and has been rallying back. So odds are there'll be nothing to do here. On the put side, nothing. Skip it. Call side. If you sold the 165 and bought the 170, not terribly liquid. So that'll be trouble. Just getting it filled and getting it rolled if you need to. Let's move on. Next, Darden, post earnings. Same story probably here. Not big enough a move. You got red on both sides. That means volatility premium has been sucked out of both sides, which means it's not as valuable now. So we want to sell when these things are more expensive, okay? Skip the put side and skip the call side. Okay, moving on. Let's look at Zion Bank. I believe they got a downgrade today. Earnings are January 23rd, so that's probably included in this expiration. Yes, downgrade to neutral. Wells Fargo adjusted price target yesterday. Here's our chart. Down slightly, but not bad. It looks like it hit resistance yesterday. This low became the ceiling here. So the move should have been made yesterday. Why don't we look at the KRE instead? Down slightly today. Looks like it hit resistance from way back in January of 21. I thought it could have gone farther to this resistance here at 56. That's what I was waiting for. It still can. So we'll keep the KRE on the list. If it gets to 56, which is a little bit farther away, we'll make a move there, okay? Keep the KRE on the list. Next up will be Rivian, RIVN. Up again, very slightly. Got this downward trend line. Let's look at the call side for January expiration. It's only a $22 stock, so this one may be a little bit more difficult. The 27.5 is a little close. If If you sold the 27.5 and bought the 30, what do you get? $64 minus 36 divided by 2 divided by 250, 5.6. Not that great there. Put side, skip the put side. You have to sell the 17.5 and you don't get paid for it. Close. No cigar. Moving on. Let's look at the solar stocks. They were on a tear the past couple of days. Solar Edge first. Earnings are in February. The past 2 days. Yikes. Let's look at the call side. Skip the call side to a liquid. Put side, same thing. Not enough volume here. Let's look at Enphase ENPH. Traded this one a bunch before. This one usually has better liquidity. Earnings, February 6th, okay. On the call side for January, if you sold the 150, bought the 155, what do you get? 232 minus 183 divided by 2 divided by 500, not even 5%. Put side maybe? If you sold the 100, bought the 95, that's 171 minus 111 divided by 2 divided by 500, 6% there. I don't know if I'd want to take the put side though. 100 on the chart. Right here. That seems fairly priced. There's no edge here. I'd skip it. Moving on, let's look at AI. Up 2%. It's had this post-earnings drop and rally back. Good liquidity here. This is nice. On the call side, 37.5 is a little too close, and the 40 is too far out. You'd have to take the 40. Sell the 40 and buy the 42.5. You're not going to get paid for it. 64 minus 43 divided by 2 divided by 250, 4.2%. Put side, how about that? Sell the 25 and buy the 22.5. 38 minus 16 divided by 2 divided by 250, 4.4. Pass. Next up, Affirm. Earnings of February. This thing's had a big run as well. Looking back at the peak here in March of 22. On the call side. Shit. Same thing. 655's too close. On the 60's too far out. If you sold the 60, bought the 65, 101 minus 65 divided by 2 divided by 500, 3.6. If you sold the 55 and bought the 60, 166 minus 102 divided by 2 divided by 500, 6.4% there. But for me, the 55 is a little too close. $55 is right here. When you look at it from this perspective, it's awfully close. Interesting. We'll keep Affirm on this list. We'll follow up next week. All right. Coinbase is next. I can't remember. Coinbase was in the news. I think some SEC ruling on something. Straight march up. Cuckoo. Earnings are February 20th. Yeah, there's some ruling by the SEC today. Down 2.5%. Here's our chart. Let's look at the call side. We sold the one, just a little illiquid. You don't get good liquidity till you get out to the 220, but by the time you get out there, you're not going to get paid for it. If you sold them 195, bought the 200, 342 minus 292 divided by 2 divided by 500, 5% on the nose. And you have bad liquidity. Close, really close, but no cigar. What about the put side? Better liquidity on the put side. You got an 11-cent spread here, 10-cent here. You sold the 110, bought the 105. 185 minus 135 divided by 2 divided by 500, 5%. I'd skip this one. Really close, but no cigar. Let's follow up on the TLT. Boy, oh boy. We'll open a short call spread in the TLT. Selling the 105 and buying the 107. Hold on. Let me do some quick math here and we'll decide what we'll do. 107, 8, 54 minus 27 divided by 2 divided by 300, 4.5. 104 is a little close. 104 and the 107. That's the one to make. Selling the 104 and buying the 107. 69 minus 34 divided by 2 divided by 300, 5.8%. That's the trade you want to make. 104 is a little close for comfort. Let's check it out. Yeah, 104 is right here. What the hell? Let's do it. So for January expiration, we're going to sell the 104 on the call side and buy the 107. $300 spread. Verticals. Set this to 3. Here's the 104, 107. So we're risking $300 on this one. We'll go for 38. Sell one January 104 call and buy one January 107 call. Limit credit of 38 cents. Preview this. Sell one call to open. Buy one call to open. Credit of 38. Everything looks good. We'll go ahead and send this one out. So if this one gets filled, 38 divided by 2, $19. That'd actually be a 6.3% return. One of 4 is a little close, but that's okay. We should have some. You see how support here can now become, is the key word there, could become resistance here, and we'll get a pullback on the long-term rates, okay? And same thing, descending trend line here. could pull back. Or this could keep rallying like crazy. This could be the start, which I actually think it is. I think this was the bottom. It could be the new short-term bull run in the long term for the 20-year. Okay? But that's okay. So if you have a small account, this is a $300 spread. Next, gold, GLD. Not much movement post-Fed meeting. We had the big rally up on Wednesday, and since then, hardly any movement. Call side, you sold the 196 and bought the 200. Okay. That's $400. 196. 101 minus 52 divided by 2 divided by 400. 6.1% there. That's not bad. Put side, I don't think you're going to get paid. The skew is to the call side on these. On the put side, you'd have to sell the 182. You don't get paid for it. So the 182 and buy the 178. I want to make that trade, though. Call side's where it's at. The gold market is sniffing out rate cuts. 196 in the chart. $196 is up here. Top right corner there. It seems like a big move, but no. Hold on this one. Next, Moderna mRNA. I think it's up again today, huh? Yes, slightly. Had a big day yesterday. Earnings are February 22nd. Any news? They had the cancer vaccine news yesterday. That's why they gapped up. Still not a good stock, not a good company. Horrible chart. It's kind of in no man's land here. I'd wait for it to move up a little bit more till around 99, 100 to sell a call spread, so we're not there yet. And on the put side, it's not very convincing to sell puts yet either. You'd have to sell the 70 and buy the 65. You don't really get paid for it. 76 minus 37. Divided by 2, divided by 500. 3.9 on the put side. Skip that. Call side. 100's too close, and the 105's too far out. You'd have to sell the 105 and buy the 110. Same thing, you won't get paid for it. 120 minus 74 divided by 2 divided by 500. 4.6. Skip it. All right, that does it for that list. Got a little bit of time here. Let's go to our IV rank scanner. Sort by volume. See what we got. IWM still has some heightened volatility. Let's check that one out. Down slightly today. That's good for me. IWM. We sold the 197, bought the 200. So our short strike is in the money. $300 spread. Sold the 197, bought the 200. So I'm banking on a pullback in the next couple weeks. Get this guy out of the money. When did he open this? Open it on December 5th. So open it on December 5th here. Move against me. I'm anticipating this rallying, tapering off a bit as we get to the end of December when things quiet down a bit and get into January, which will be, I assume January is going to be a bit more volatile to the downside. I don't know that for sure, obviously, but that's what I'm anticipating with this big move up, okay? If you want to open something new today, I'd sell the 210 and buy the 215, sure. 129 minus 74 divided by 2 divided by 500. Only 5.5% there. It's not that good. I wouldn't open this trade anymore. Put side. If you sold the 187, yeah, and bought the 182. 98 minus 51 divided by 2 divided by 500, 4.7. So there's slight call skew, but not by much anymore. I'd stay out of this trade. Next. Neo. Nope. We're at that point where we don't have a lot of earnings now till early January. A couple here and there. I think we get Nike next week. Bank of America. Pass. TLT we already looked at. Avago's too big. Rivian we already looked at. The KRE we didn't look at the KRE, did we? I think we did. We did. Sorry. It's Friday. My mind is shot. We'll look at the KRE next week. Plug. SoFi Marathon. Pfizer. PFE. Yikes. To go back. Hold on, we got to pull out the weekly here for this one. We got to go back to 2013. What a mess. 24-ish to get support. Let's skip this one. It's a mess. Next. USB. Earnings are in January. A little more than a month away. Upstart. Coinbase we already looked at. PayPal. We looked at PayPal yesterday. Citigroup. Getting close because of earnings. The GDX. Stick to the GLD. It's better. FXI. Let's take a look at China. How's the put side look? All right. Let's look on the put side. I may have already missed this one. Selling the 2185. Now you don't get paid for it. Let's look at the K-Web. Same thing. Nothing. Moving on. Next page. Robinhood will skip. Emerging markets will skip. No. Chewy. Let's take a look at Chewy, then we'll call it. Up 6%. Oh boy. Earnings are in March. Insider buying. Wonderful. Kind of like the put side here. You don't get paid for it. Call side. You'd have to sell the 25 and buy the 27.5. A little close though. 44 minus 19. Divided by 2, divided by 250. 5% on the nose. I'd skip this one. All right, I think that'll do it for today. One more time. Let's just go over Boeing so we're all clear here. So Boeing, expiration today. Trying to roll. If this does roll, I got the I've got it set at 0, okay? So we're not going to pay to roll it. We're not going to receive any credit to roll it. We're just going to go straight across 0 to get us more time. That's all we're doing. But if it doesn't get filled, like I said, this will be the first loss of the year. Statistically, 6.7% chance of that happening with these trades, but it does happen. So again, this is a real channel. This is all live. These are all real trades. So you are going to have losses scattered throughout the year. It does happen. We just had this incredible move against us. But like I said, Monday morning, if this is still up again, we'll open up another Boeing short call spread. Okay? And I'll explain it one more time. We shorted the 220, which is right here. So, and then we bought the 225. That's a $500 spread minus the 84 cents that received. So we'll get to keep that $84, and we'll take a loss of 420 something or other. And so what'll happen is we'll get assigned the short negative 100 shares and get assigned the positive 100 shares. That cancels itself out. We'll have 0 shares come Monday morning, and we'll just take the loss of 420 some bucks. Not bad though, considering we've made all these great trades during the year, collecting 20, 30, 40 bucks here and there. It all adds up, but you do get losses. All right, it happens. My bad. Next year's a new year. Same thing's going to happen. All right. Happy Friday. Happy expiration. See you all Monday morning. Tune in every day, 7:15 a.m. on the West Coast, 10:15 a.m. on the East Coast. We go live trading options together. Tell your friends that are trading as well to subscribe and tune in. We'll all trade options together. See you Monday morning. Enjoy the weekend.